This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about trading patience today. And we're going to do it in two forms. One, before you get in the trade, having patience before you get in the trade. And then secondly, having patience once you're in the trade. So, I mean, these are, I've talked about patience over and over again in previous videos. I just wanted to show you in real time, basically. I have a trade that's currently on. It's not a short-term trade. It's based off the weekly and the daily. But I think there's a lot we can learn from this if we take a closer look. So let's get into the chart. On the left side, I've got the weekly. On the right side, I've got the daily. This is Diamondback Energy. FANG is the symbol. And one of the things we were looking at was the fact that on this chart, on the weekly chart, price kind of came back up through. And this was pretty consistent in a lot of different energy stocks where it had come through resistance from 2019 when it made this move to the upside and then held in this zone. Right in the mid 70s. Now it poked down through a little bit, but it never closed on a weekly basis back below. So this was sort of intriguing for that from that standpoint. However, because of the way this was playing out and the harshness of the pullback and the fact that the MACD looked like it actually wanted to cross back down under the signal line. And as I've mentioned in the past, when I see that, I kind of like to see a little bit more of a consolidation pattern develop. And so even though this made this move to the upside on this first pullback, really wasn't interested in this. Now, part of this has to do with the fact of what we were looking at related to energy stocks. They looked like they needed a little bit more time to consolidate. But secondly, just based on the way the MACD was acting, kind of felt like, especially when this dropped down here, that maybe we'd get a full test of the 18, which is what took place. Now, because this has strong ADX, and during this pullback phase, really didn't have much of an effect on the ADX at all. It stayed above 40. We were really intrigued. So when the stock gapped back up to the upside, to me, that felt like, okay, we've held this area. And now it looks like maybe it's starting a new move in the upward direction. So we've gone through an up move and now a consolidation pattern. And now it looked like we were getting ready to get started again. So that was sort of the starting point for this trade. But I think one of the key things we want to know or recognize is the patience that we had. We didn't, even though this was really strong and it was pulling back, and you could almost argue that it was sort of like a pinch play on the MACD, the way this pulled back, it was still pretty far from the 18. And just based on how big of a move it made and the fact that the MACD did look like it was a little tired, I kind of felt like we were going to get a little bit more consolidation. Now, again, I was looking at what was taking place in energy in general, just felt like we needed a little bit more time here. But I was very intrigued based on the strength of the ADX. So once we had that and we had this gap up bar, that gap up bar shows up on this bar here. So we didn't buy the gap up, but let's just understand what the trigger is in this trade. Because number one, when you have strong ADX on one time frame and then low ADX on the other time frame, you don't necessarily want to wait for a full-fledged strong move and pullback or anything like that. You don't need to do that. If you have low ADX, you can buy the breakout. So the breakout bar was actually on this bar, but at that point, the stock had already gone from 75 almost up to 90. And so we waited for a little pullback in this time on this next day, and we bought on this next day on this pullback here, pretty close to where it was sort of coming back to support. Now, based on the way this developed, we didn't have like a close higher low. We didn't have like a higher bottom that we could put a stop underneath. And so we used two times the average true range. And that ended up putting our stop down in here just in the high 79 area. And when we do it this way,
we're basically saying we've got a stock that's very volatile. I mean, this is probably Diamondback Energy is probably one of the most volatile stocks in the energy area. And if we're going to put a trade on that we know is from a very volatile stock, we want to give it some breathing room. So we were basically down underneath the 18 in this situation. Just in case this decided to consolidate, maybe hold the 18 and then go, it gave us plenty of room to be here. So with the stop down here, what this did was allow us to it created patience in terms of allowing this to move down here. And then when it rallied up and then had a really hard move for a couple down days, I can tell you in the past that I would have been stopped out of this. When I first started trading, probably for like the first 5 years, anytime I had sort of flagrant price action against me when I was in the trade, I ended up just getting out. And this right here is a perfect example of me being shaken out of a trade where nothing was really changed. I mean, my stop is down here and I just wasn't willing to give it to the stop. So one of the things that I think learning this patience to see a trade through, and I'm trying to convince more and more of the guys that I'm working with one-on-one that you have to have a really good reason to raise this stop from here up underneath this last low. If you're going to do that, you better have a really good reason for doing it. And for the most part, what I'm trying to tell guys is not to do that. Just leave it alone. And then once you get a move of 1-to-1, so if our entry's here and our stop is here, we figure out the risk of this trade and then go and figure out what 1-to-1 would be. That would be right about here. And as this moved up to around 94 and change, something like that, we actually took a quarter of our position off. And then we raise the stop to our entry. So now this stop here goes right here. And now we're giving it plenty of room, but realize what we've done. We've taken a little bit of a profit. So if it comes down and stops us out, you make a tiny bit of money. If this turns around and works its way up to like the low 100 area, I think it's around 101 or something like that, then we're going to take another quarter of a piece off. We'll take another quarter here, and we're going to raise the stop to our first target. And that way, what we've done, we're giving ourselves the ability to continue to make money in this trade. But we're also, at that point, we've taken half of the position off and we're leaving plenty of room for potential upside. And the risk is out of the trade. If this thing were to stop, come back down and take us out, then, we would take a 1-to-1 trade. Whatever we risked, we ended up making in the trade. That's how this would have played out. So I just wanted to give you an idea because, again, I think patience is pretty important here. It's important to wait for the setup and make sure you're getting a position on that you can have the confidence to see through. And then once you have the trade on, make sure that you give it a little bit of room on the stop. And then from that point, let it play out. You don't have to micromanage the trade. If you're sitting there and watching every single bar and every single tick, odds are pretty good you're going to get shaken out of a position like here. And if you do that, this is going to happen a lot. If you're good at finding decent patterns, which I think I am, then you're going to have a lot of shakeout patterns that end up working out over the course of the next week or two. So I just wanted to talk about patience a little bit more and show you in the form of a current trade that I have on and how it's working out so far. So we've taken a quarter of a profit. We're at a break even on the balance. I mean, if this comes down and takes us out, it's no big deal. It's just another trade in a series of trades. You got to start thinking that way if you want to be a professional trader. Ask me any questions or post any questions or comments, and we'll see you next time.